Hello, traders and investors. Welcome back to Investing Channel. My name's Paul Wallace. And after my little section on the aviation sector last week, I thought today I'd have a little look at some of the financial sector, in particular because this week we have a bit of an earnings season beginning, and in particular we're focusing on financials. So I thought for my first slide, what we'd look at is actually the ETF of the financial sector. This is XLF. Hopefully there you can see the charts that we've brought up there, and I look at these things as a very simple technical trader, and what I look at that when I see that XLF is that we dropped pretty strongly there from 31 to sub $18, which pretty much we've seen and done. But actually what we saw was had a little bit of a bounce, a little bit of a move, and then what I'm kind of terming a bit of a euphoria pop that we saw in early June, where you can see sort of price rallied on its way up there, just above the $26 mark. And then, of course, as we have seen, sort of numbers spike in the US, and also a little bit of a global worry about a kind of a second wave. Prices have kind of dropped away, all right, and now I see us there for XLF, for that financial sector in general. I see us like holding it just above that $23 mark, okay. And of course, as I said, we're going to see quite a few earnings reports, all right, and it's going to be interesting because I suspect the numbers will be poor, but of course everybody's expecting that. It'll be more about perhaps some of the statements that go with it as markets look to sort of see what it's going to be like for the sort of latter half of 2020. So with that in mind, what I thought I'd if we look at my second chart, well, my second chart here is for JP Morgan, and it's in some respects the price action is not that dissimilar to the XLF ETF, as you can see there. Okay? We sort of dropped our way down from just underneath the $140 back down to sort of sub $80. Pretty much like what we have seen for all of the financial stocks. And you can see there for yourself, actually we sort of bounced our way sort of sideways pretty much through sort of April and May and into June. Then we had that, that euphoria pop back up to just above 112, okay, in the sort of $112 to $114 region there. And once again, then, okay, as that kind of worries re-emerged, okay, the second wave, we've sort of dropped back on JP Morgan, okay. And I see us there, we're kind of holding just above $92. And really what I'd want to see, okay, is a sort of drift towards $100 and then above and hold above there. That would give me sort of an element of bullish sentiment that I'd be pleased with going forward. And if we look at my my final chart here is for Goldman Sachs, all right. And it's interesting when you were sort of if you reference this chart compared to the one we've just looked at JP Morgan and the one we looked at for XLF. Yeah, we've had the same price action there, okay, dropping from like 250, okay, down to around about kind of 130 during the sort of madness of March. But hopefully you can see there it's come back stronger than both JP Morgan and XLF, okay. And we had our little euphoria pop up to around about the 220 region there, filled in a little gap where we could see there'd been sort of previous support back in December. And yes, we did drop away, but we're still back. We're holding up above $200. And personally for me, that will be the key thing, whether, with the numbers, which I think come out tomorrow for Goldman Sachs, is that a case of, can we hold above $200, okay, going through this week? And in which case, well, then I would see that as a relatively sort of bullish sentiment going forward over the next few sessions. I hope you found that useful. Hope it's given you a little bit of insight. As always, I wish you the best of success in your own trading and investing, and I look forward to speaking to you soon. Trade well, everybody.